Hello everyone, welcome back to Mindful Investing. There's one question I'm seeing everywhere right now. Which healthcare stock should I buy? That's not surprising. Some of the biggest names in the sector like United Healthcare and Novo Nordisk have taken serious hits recently. But does that mean they are great buying opportunities now? In this video, I'll evaluate United Healthcare, Novo Nordisk, HIMS and HERS, Eli Lilly and even XLV, the healthcare ETF, and share which one I believe is the best play right now and why I'm personally buying one of them. Let's dive right in. Let's start with United Healthcare, one of the most popular and well established healthcare stocks in the world. Right now, it's down significantly from recent highs, and my prediction model shows a 10% upside in 1 year and 58% upside in 5 years. That's decent, but here's the thing, this isn't the first time United Healthcare and has seen a major drawdown. In 2019, United Healthcare fell from $300 to $190, a nearly 37% decline. And over the last decade, it had multiple pullbacks between 30 to 50%. Why? Because healthcare stocks, even the best ones, are extremely sensitive to regulation, Medicare reforms, and political headlines. From a financial perspective, United Healthcare has a total debt of $81.2 billion dollars with cash position of $31 billion dollars and a free cash flow of $24.8 billion dollars. So, yes, it's a quality business and currently oversold on both the daily and weekly charts. But I personally believe there's still some short term pain ahead. That said, I've started buying small amounts of United Healthcare in one of my other accounts, but this is a long term play for me. I'm thinking at least 3 to 5 years minimum. Next up is Novo Nordisk, famous for Ozempic and its weight loss drug pipeline. Right now, my model shows a 9% upside in 1 year and 51% upside in 5 years. On paper, Novo looks like a powerhouse. They have a free cash flow of $74.3 billion, dollars, cash position of $38.6 billion, dollars, and a total debt of $118.7 billion. Dollars. But again, even Novo isn't immune to volatility. In 2015, it dropped 50% from $30 to $15. And if you are thinking, well, that was years ago, remember, the risk reward with healthcare stocks is asymmetric. You can lose 50 to 90% if a trail or approval fails or if the legislation changes. Yes, you can also get 5x to 10x returns, but only if you invest a meaningful amount. If you just buy 10 or 20 shares, even a 5x return won't move the needle. I learned this the hard way. Back in 2020, I invested in Teladoc and CRISPR Therapeutics. Both were high flyers and both are now down over 90% from their highs. So, personally, I stay very cautious with healthcare stocks. Now, let's briefly talk about HIMS and HERS. Another name I have covered in my stock prediction series. This is a completely different kind of healthcare stock, direct to consumer, tech enabled, and profitable. Their balance sheet is very clean. They have very strong cash position, minimal debt, and operating leverage improving quarter after quarter. While HIMS has already run up significantly in 2025, if you want exposure to a modern growth play in the health and wellness space, this is one I still like a lot and I'll continue to buy if it drops closer to its key support levels. Now, let's talk about Eli Lilly, one of the most discussed healthcare stocks right now, and personally, the one I'm most interested in at current levels. According to my model, Eli Lilly has a 32% upside in 1 year and a whooping 301% upside over 5 years. Technically, it looks very compelling, trading below its 200-day EMA on the daily chart and below its 50-day EMA on the weekly chart. It also reports earnings this week, and if it dips closer to the $600 range, I'll be adding it to my portfolio. That's my ideal entry point. Now, financially, here's how it stands. They have a total debt of $38.5 billion dollars with cash position of $3.2 billion dollars and free cash flow is currently negative. That might raise concerns, but in Eli Lilly's case, I believe the negative cash flow is driven by aggressive investments in research and development and marketing, especially for its diabetes and obesity drug pipeline. On the revenue side, the business is growing across the board. Geographically, the US and Europe are the biggest revenue drivers. By segment, diabetes leads the way with $33.2 billion, dollars, followed by oncology at $8.9 billion. Dollars. Among all the top healthcare stocks I've looked at lately, Eli Lilly stands out the most for both its technical setup and long term growth potential. I'm keeping a close eye and ready to move if it hits my buy zone. All right. Now, if you are still interested in the healthcare exposure but don't want to deal with the individual stock volatility, one option is XLV, the healthcare sector ETF. Right now, XLV is trading below its 200-day EMA on both the daily and weekly charts. That's typically a great entry point. It gives you diversified exposure across healthcare with much lower risk compared to buying individual names. Think of XLV like healthcare with a seatbelt on. Less upside, but also far less drama. So, what's the bottom line? I'm slowly accumulating United Healthcare, but this is definitely a 3 to 5 year hold in my view. I really like HIMS, and I'll be adding more at strong technical support levels. Eli Lilly is now back on my watch list. If it dips below the $600 range, I'll likely initiate a position, and I love the long term potential here. I'm avoiding Novo Nordisk for now, just based on the current risk reward setup and its history of sharp drawdowns. And if you are looking for broad healthcare exposure with lower volatility, XLV is a solid way to go, especially since it's trading below its 200-day EMAs. Now, I want to hear from you in the comments. Which healthcare stocks are you watching right now? Are you adding United Healthcare, Eli Lilly, HIMS and Hers, or playing it safe with XLV? Let's talk strategy, and don't forget to like and subscribe to follow along with my investing journey and get real time analysis like this. Thanks for watching, and I'll see you in the next video.